Hey, good morning, traders. It's about 3:38 a.m. in the morning, and I'm sitting here making a video. Why am I doing this? It's because I love you guys. But anyway, for real, let's get going. We're looking at the Euro New Zealand dollar, currently on the 4-hour time frame. I'm going to go to the daily to get the overall picture and bias of this market. All right, so let's go to that daily, look at that. So looking at this daily, we can see it looked like price is trying to attempt to break out of this range that it was sitting in. So let's mark the range. Forgive me if I'm not so good early in the morning like this, but I saw this trade developing and woke up, something woke me up, and I just felt like we need to get this listed. So this was the range we were looking at. Then price violated it here, but it looks like price is just rejected. Just came out of that level and then came back into the cloud here, and now we're looking for price to come down to this point, break this cloud, and continue to the downside. So basically what I see price doing right now. All right, so we reject, we violate, then we retest, and then we go to the downside. That's what we're looking at. So that's what we're looking at with the daily time frame. Now if we're wrong, price will just come back up in here and go around here and fool around, or whatever it's going to do, right? We don't know. Let me look at removing this from the chart. So another thing is, once the price moves a little higher, which I expected it to move a little higher after this, I wasn't taking this break here because I don't have a dark future. My future is still bright, so I need this crossover to develop. And I think that once we start seeing these candles close on the daily, which is, we got a good while to go, we may see the next move to the downside and we'll see this turnover. Now if not, we're going to probably get a lot of ranging in here and our trade will be of naught. All right, so we want to see this thing move, and it looks like it's trying to get out of this range. So that would be the thing. We've sat in a range for a little while since the 11th of, almost really like the 11th of January until now, where we violated this point. All right, now I see a few things. Okay, so let's mark these on the chart. First of all, price can come up to our level here. I'm going to make this a zone, because when we go to the 4-hour, we want to see this level. All right, so we could see this level. This could be our real level where price is going to really return, change direction here. So let me show you this. So currently what I'm looking at is price came down. We're going to return here and go to the downside, right? Well, if I'm not right where my levels, maybe price does this and comes back up into this zone here and then goes to the downside. All right, because you do have some kind of you have your support here, your resistance here from the cloud, and you have your resistance from the Kijun, the daily Kijun, and then we have our zone here. This is our fractal zone. So we have that. That's going to be rejection areas where price may come up to bounce. So we may be early for this trade. So we may be a little early, but based off of what I see on the 4-hour, I have to go by that. The daily also is not showing me enough, but I can catch the trade earlier. The daily is showing me the rejection also, but you can get a better entry by going to the 4-hour. So now I could sit here and wait for the daily, which would put me at a, let's see what we could do here. We can enter at this level a little bit right here, or we could wait for the Kumo breakout, which will be this point. So we're going to mark this Kumo blue, and we'll know that's what we're looking at there. So this is going to be our entry on the daily. Let's change this to green, because we're going to move this, because when we go to the 4-hour, that's not what we're going to be looking for. And then this is going to be our stop loss level. a little bit above this point. I like to be a little bit above that level, and if we get a fractal level there, that would be great. So that's going to be the exact setup here basically. Now if we wait for a price to violate this cloud here and close below on the daily, we would have a stop loss a little above the a little bit above the cloud, so we would actually have our stop loss like right here, all right, somewhere in there. But we're going to put our stop loss a little bit above this point. Now when I say that we wait, if we're waiting on the daily to break out of the cloud, then we move our stop loss here instead of what I'm going to show you on the 4 hour. But either way, this is setting up to move to the downside. Now the thing about this pair, the Euro New Zealand dollar, look how spiky it is. That's what gets me sometime with this pair. It's really spiky. So I have to really be careful with this pair. So let's go to the 4 hour. Alright, so now there's a couple things we could do 4 hour wise. 4 hour setting up nice. It's showing a rejection off of this Kijinsen. Alright, now if we are too early, price will come up into this area here. This is our zone that we said for the fractal zone. And also you see where the stop loss is right here. That's going to be the 4 hour fractal level. So that's where we could see price come back up to this area here. So if we're early. So now what I'm going to do now, and also you could wait based off of the daily time frame, just trading that daily on a lower level. You would wait for your daily, or you would wait for your 4 hour candle now to close below this level. This would represent your daily Kijin, your daily Kumo breakout, but you're doing it on a 4 hour time frame, and then your stop loss would be, you know, somewhere in this zone here between this green line here and your entry right here, which would have been your breakout. Now you would have to wait for a candle to close below this level, below 165 235 before you took the trade. You would need your candle to close, because that would represent the 4 hour breakout of the daily time frame, if you understand what I'm talking about. I don't know if I ever really explained that a lot, but I talk about it on my video course about Ichimoku. We have we have an online video course, and I talk about this kind of stuff. But the thing is, we want to, if we do get this move to the downside and we wait for this break here, then you could put your stop loss really tight up against this level. Matter of fact, like the candle that breaks, so let's go like this. So say we get price move down, and then we get it move down a little bit, and then this is the next candle that closes. The candle closes right here. My stop loss will be above here. Alright, because this is the Kumo breakout, daily Kumo breakout level. And we'll be looking for it on the 4 hour time frame. Hopefully you understand that. So now, currently, what I'm looking to do is this. Alright. So this was my entry daily wise. This is where I would have been entering on the daily. So let's go back so you could see the differences. So based off of what we see on that daily candle, this would be our entry. And we would not be early because price hasn't come down to trigger us. But now, looking at my 4 hour, my entry, this candle still has an hour and 13 minutes to close. Is that right? I thought this candle closes at 4 o'clock here. Okay, so when this candle closes, if it closes below this level, I probably would take the entry anyway. Alright, and then there's a couple places where you could put your stop loss. Now I'm going to show you where I do. I put mine for a technical level. So if we get a close, we could enter on the close of this candle. Has to be below this candle here, the rejection candle. This is rejecting this Kijun, and it gave us a good signal with a wick like that. You could see the same thing back here. It rejected the cloud and the Kijun, and then the market went lower. But here, the next candle was bearish. Now this candle could close bearish, and we'll have an entry here. Alright, so that's what we're looking at. We may be getting away. This price may be trying to start moving here. The thing is really, we want to wait for this candle to close. It could make us a little farther. Now, here's going to be your entry. So based off of where this candle closes, if it doesn't close below this candle here, then we're not triggered. And I'm too early or too late getting you guys this trade alert, but I showed you the different levels where we could enter also on the breakout below the cloud. But you can now move your stop loss to this point, which will give you about a 40 pip stop loss from this level here. All right, so that level entry is right now at 165.902, and 166.418 will be your stop. But myself, I like to be above this previous point, so it makes my stop loss a little bit bigger. I like to be a little more technical with my stop loss. This is a little more support and resistance based, but price has been up here before, so it can still wick to that point. That's what I look at with that. So we want to see this, what this last candle is going to do when it closes, and then we're looking for price to continue to the downside. Now your first target, basically, you want to get to where you were before at least. So if we're going to get into a range, maybe we set the point here, and this is the range level. We need to get through that point first. So that'll be your first point of target for your entry. So say we enter here, we're shooting down here almost 200 pips. So 163.964 will be your first target, right? Then your next target, got to go to the daily, is a nice move to the downside here. And I think your next target, guys, really, I'd be shooting for this target here. I'd be looking for the market to get back to this point. Probably wouldn't be as greedy and just move it to here. So I would be looking for 158.977, big trade, right? That's a big trade. So even looking at this on the daily, we got to see what happens here. We got a while for the daily, guys. But we do have that rejection. We have price come in, retest, reject. It violated, retested, and now it's rejecting. And then we want to see the price to move to the downside. All right, so 4 hour. 4 hour. You could see the same exact setup here. And then price fell to the downside. Then we had a move. This is a retracement, so a correction of this move here. This move here, this is a correction, just as this was a correction. The real move is this whole move to the downside. We got a TK crossover right here, that's bearish. Never attempted to be bullish. We got a crossover here, that's bearish. So our cloud, our daily cloud, our future cloud is bearish. Chiku span is well below price. That's bearish, and price is below the cloud. That is also bearish. Everything is bearish. You should be looking to trade this to the downside. Guys, this is textbook trade entry here, but that doesn't mean it's going to work. But it's a high probability trading opportunity. So that's what I'm looking at. So there you go, first target, and then overall target way down here. That's a big target to get down to, but we can at least trade to this point. Alright, so that's pretty much all that I wanted to show you guys. This is a good trading opportunity. A lot of times we may be a little early though, so price could do this for you. It could sit in this point. It likes to trigger you just below this level here. Just below this level. It likes to trigger. Now you can see, because it would have triggered your entry here and then move up higher. And then finally set up somewhere up here and then go to the downside. So if this violates and it has to close below this, above this wick here, if price moves higher and closes above the wick here, that's an issue, and that's where everything that I'm telling you becomes non-void. Everything I'm telling you becomes void. All right. And then you'll start to look for the exact same thing I'm telling you now here at the daily fractal zone. You'll look for the exact same things. So what you're going to look for will be this. So I'm wrong here. So maybe price does a little something, then it comes up. We're going to still look for it to do the same thing here and then to the downside. Or else it could do it here and then to the downside. Alright, so it'll set up, give us a nice entry, and then move to the downside. So I may be early here. But based off everything that I'm seeing, I have to go by what I see, right? I don't know what the market's going to do. And I see some selling pressure coming in here, with this rejection. Lets me know some bears are entering this market after the bulls had some control here. Now still on the daily, it's not showing that yet. Well, actually, sorry, it really is. The daily is showing you that, because what's the daily showing us? The daily here is showing, look at this rejection so far. There's some bears entering the market here. So that's what it's showing you. Now the daily, again, our daily entries down here, a little bit below this candle. So if that's your daily entry, you could go back to your 4-hour. You could enter at this point with a stop loss, where I have this at about 166.433, and your daily entry level here at about 160, 165, 625. All right. And then that will make sure you're not too early on based off of just the 4-hour time frame. But 4-hour wise, we're kind of ready. All right, so that's what we see. That's what I'm looking at. This is a trading opportunity, a trade setup on the euro, New Zealand dollar. All right, but other than that, guys, I'm going to be heading on out of here. I think I'm done. I'm going to go lay back down and hopefully wake up and I'm triggered. All right, guys, have a great week of trading, and God bless you guys. So long.